All right, I just want to make sure the chat's up here so you guys can throw whatever you guys want in during today's session. Uh, like you said, my name is Matthew Timpane. I've been with Schaefer's Investment Research now for, well, let's see, since 2018. So going on 7 years here, I think this June. And I have a background in portfolio management, trend following. I've been a CMT also since 2018 as well, or yeah, 2018. So, um, feel free to shoot any questions you want over here, any tickers that you want. The big thing that I'm kind of looking at here, you'll see I do have a lot of moving averages here. You'll see that they're kind of trending down. Don't mind the two kind of trend following indicators. I got a 4 hour and a 1 day on there, but they work pretty well. But we are still seeing, pressure obviously on the markets here with, the tariff news kind of every single day throwing out some new volatility. It's extremely tough to be getting, swing long right here. Obviously, a lot of times, I mean, what they say is, it's the best time to get long is when they're fearful. Other people are fearful, but we just don't know exactly how this is going to play out. So I myself have not been probably buying as much as I normally would have been, like on a personal standpoint. And even from a trading standpoint at our company, it's been harder to do, right? So we do 5 day window trades sometimes, and it's extremely tough to come up with these trades. We did have a pretty successful week last week. We were still in the positive, and it's tough when you're dealing with time premium and options, especially in this environment. IVs are extraordinarily expensive right now. They have come in a little bit here this early this week, so. Let's start taking a look at some of you guys' charts here. As you can see, we're still on the S&P 500. We're still underneath that 20-day moving average. We are on this 5 day moving average, which is blue here. I think the last time we did speak at an AYT event here, analyze your trade. I was talking about this 161.8 fib, and I said, a lot of times you see a stalling action or a correction. This time we kind of got the stall and then we got the correction. So, it was from a big move higher. So let's start pulling these things out and looking at people's charts. All right. So, it looks like I have D now. All right. D now. D now, not a name I'm familiar with, so I apologize. But we will take a look at this and maybe let's just get rid of maybe these trend kind of looks here temporarily. If we want to pull it up, we can take a look. All right, so this is a volume profile for 1 year. So you're actually trading just right above that volume profile as we speak here. Um, and you are sitting right kind of at support. So obviously this trade can kind of go one of two ways. You are kind of breaking back above it today after having another dip lower, but you are in this big range for most of this past year where you finally got a little bit of a green shoot, I would say, a breakout on earnings, and then you got to pull back. What I kind of like to look at this as a fake out move here. It tried to take you back below that trend line, and it looked like you were going to resume, right? Until the tariff news started hitting. Liberation Day, obviously, you got the first big move lower, and then it broke you right back through that level. So now we are starting to see some kind of a bottom form here off that 200-day moving average. And so my bars are kind of also, they align with it's like 7 confluent indicators. It just gives me a general idea. I don't really like using like, a bunch of indicators, but if I can see 7 of them that I designed to like kind of roll into say, hey, RSI is heading higher, MACD is heading higher, CCL is heading higher, or CCI is heading higher, it kind of helps a little bit, right? Hey, other people are looking at this. That's what it tells me. And you are seeing that now that you're starting to see some of that bottoming action here. So the bar turned green for us, and but you are still got the 50-day and the 20-day to kind of contend with. But you are above the 5 day. You are above year-to-date anchored VWAP level here as well, which is the purple line. So this isn't bad. I mean, you kind of know what you're gonna get, right? Like I would probably, if you're gonna trade this, today, and you're looking at it from a swing perspective, use this kind of 1492 level maybe as like if you're a conservative trader, and you just want to try to capture this upside move. You could probably enter this on this 1550 like around the close, I would say. That's probably how I would look at it. Make sure that the demand is still there. And then you're still got these moving averages, like I said, to contend with. But a name like this, they're gonna have a tendency to kind of, especially in a volatile market, blow through those at times. You can see where it was a little bit less volatile. You followed that 50-day moving average lower. So I wouldn't worry about it as much just in this environment since it's so news driven. But that's kind of how I would handle it. If you want to have a little bit more risk, use this 200-day as your stop. So $14 right now is your 200-day moving average. You kind of get below that 200-day moving average, you open yourself up to possibilities of, $12.75 or even coming all the way back down, testing those lows at $11.50 if we are, really in a bear market here that's not just a quick move. All right. Nike. All right. Nike. Obviously, it's been a huge, huge downtrend. This is probably an old trend line. Let's just get rid of it where we traded it on that break higher. Let's look at it from a weekly scale, just because Nike is just in the dumps, right? So, unfortunately, the volume profile will not really kind of transfer over. So it's going to give us, instead of a 1 year, it'll give us on the weekly scale. So that's not really relevant here, um, since it is set up to 252 days. So we don't want that. It's 252 weeks, which is a 5 year profile, I guess. But here we go. Look at it like this. This is where you're going to want to see Nike kind of regain, right? It lost 60. 60 was a pretty important level, and really, the most important level is really kind of 65. It was those weekly closing lows on the 2020 kind of meltdown from COVID, and then it was these 2015 highs. So you're going to want to kind of see, that if you're looking at this from a really long term, those are kind of the levels you're going to be looking at, 60 and 65 to get higher, uh, for higher price action. Because I mean, this is in a downtrend. If you want to short this, I wouldn't be necessarily against it. I just would think that you're going to have only about opportunity to about here, so $50. So you have about a 10% move to the downside if you want. That could also be a buying opportunity. As you can see here, you have the November 2014 high, which was the high for 2014 there, I believe. Look back, yep. Um, and then that also became support, right, in 2016, in 2015. So that is another level, and it's a round number. It's like a half century number. So $50 is a big number, psychologically to a lot of people. So if you can get in at $50 at Nike, I think it's worth the stab. You do have great investors in there like Bill Ackman. This is something that, obviously is kind of timeless. But, until you kind of get out of this 60 to 50 range, look at it from a much shorter term perspective. If you're going to trade it, like I said, you kind of have 10% upside, 10% downside there on Nike. And, looking at it from like a 1 hour perspective, I use 65 minutes. This is a bear flag here, so the chances are, you could either come down and retest these lows here around 52.50 or break it and head all the way to $50. So you can see here this range as well. You can see how this larger range now has this short-term range here that's developing, and then you have the VPOC right there. So, and again, not as important because it is based off of 252 candles. All right, apps. Oh, wait, somebody said not apps. Oh, apps. Yep, apps. All right. Apps. High flyer of last year, right? Great name. Pull this back out to a 1 day chart. Oh, nope. That's my bad. Apps is Digital Turbine, not App Lovin'. So Digital Turbine was a name, COVID days, right? This thing was awesome back in 2021. You can see hockey stick formation here. Traded this a lot during COVID. That's why I got confused here with App Lovin'. But we are back towards those, kind of COVID lows and stuff. 355 was that COVID low. And then prior to that, you kind of have this, we'll pull it over so it kind of looks a little bit better. These levels here. So 550, and then the ultimate low was really around 52 cents. So really tough to kind of look at it from a longer term perspective. Probably a decent trader on a shorter term perspective. Let's just pull this in. You are holding the 200-day. You did regain that 5 day moving average, but it does appear to be a little bit weak here. You are back above this 250 area. You can kind of see here we have a little bit of support. Kind of got down in the wicks, this 260, 250 range. That's the thing about support resistance, just so you guys know, it's never fully exact. You're never going to have everything perfect. So if we lose 250, your risk is essentially probably about a buck 50 on this, right? Buck 50, buck 40. This would be the area I'd expect. You could possibly, with these gaps here, see some support around 210. So that would be a level. But you can get long. Just know that you have a lot of resistance right here. You have the 20-day moving average moving down pretty quick. That might be the signal that you want to see is that it reclaims this 20-day. And you can see when it reclaims the 20-day, you at least get some pops kind of start going here in the right direction. It does kind of like to follow that a little bit. So maybe that would be the entry I would probably use on apps. Again, I don't always trade these lower dollar stock names, but I did trade this, like I said, in 2020. And that's kind of how I would approach it right now. Look at like where the moving averages are going. You have a lot of resistance. If you can at least get above that 20-day moving average, you can get a move up to that 50-day. And if you get a move up to that 50-day or up to VPOC, that's a pretty decent trade. I mean, the 50 days sitting around 350. I mean, so if you take that from 280, even say you break over that 20-day moving average, that's still a solid trade. So definitely something that's kind of how I look at that. Let's look at Amazon. All right, Amazon. Name we all love, near dear our hearts, but we use it every day. But the one thing they do kind of have right now is pressure, obviously, with this tariff situation. A lot of products from Amazon come from China. So there is going to be some pressure on this type of name. Uh, I love the company. I think everybody loves the company. I mean, I basically use it for everything. But let's just see from a technical lens here. So I know one of our traders actually got kind of long, not that long ago. It was after this retest here. So it's a name that we like. One of our traders is long it. We'll see how it plays out. I mean, right now it's you take your risk, you look at your risk reward perspective. They're not all going to play out, but Amazon off that 165 was a gem. You kind of had this prior gap up support level here. You saw it came down here on this big move lower here in April, and then even in August, kind of move lower, right? You had 1, 2, 3 days below that line, 165, and it regained it. It even tried, even on that huge gap down. It was in August. We had that correction going on, plus it had earnings. It still tried to hold on that 165 level. So that's a big level to trade against here. So if you want to try to stay long Amazon, that's my stop level on Amazon. Once a break below 165, you're probably gonna have to get out just in case. Yes, this can happen again to you. But the risk is you're going to go much lower if you break that 165 level. It is pretty darn important, as you can tell by these gaps, these big wick downs that are trying to hold it. And you can see so far it's held. But a move lower, you're probably going to come down to 145. That would be my first guess where you're going to move to in a bigger move here. And I wouldn't say guess, but that would be the target, right? So you can see here you had support, you had resistance, it became it. So that would be your next level is 143.50. If you break that 165, 50 level, 165 level there. All right. Amazon, we did that. Silver and GDX. All right. So miners have been great this year, right? I mean, whether it's been silver miners or gold miners, obviously gold's been performing a little bit better. Silver's a little more tied to the economy. Silver, though, here itself, SLV is still stuck in a pretty big range. So right here, you're kind of playing ranges, right? So you saw these bottoms here. That was kind of coming off of these December, January low levels. And right now, you really want to see a move above this 29.50. And here's why. You can just see right here how many spots of resistance. You got May 2024, you got October 2024, you got December 2024, and then you had kind of the early months of February before you kind of got that breakout. You got that push high. You can see it's volatile when it gets through here. Again, got that push in October finally, volatile move, nice trade. You can only stay in it for so long though, and then you kind of get these moves back lower, comes out. So again, push above 29, 35, 29.50 here. And you got a nice volatile move higher. Now you're going back to that November high. and you got a rejection and lower. So that's the level I would watch. Yes, you have the 50-day and the 20-day moving average there. That's something to be mindful of. Again, with tariff news and just such geopolitical risk going on, um, news is going to be volatile. It's not going to mind moving averages as much. You still need to keep them, in perspective and say, hey, they are there. It could be resistance. So maybe if you get like a push above 29.60, close right above that level here in the coming days, that would be a good trade that says, hey, we're going to go back to that 31, 25 level, 31.30 level there on silver. Look at GDX, and we are about halfway through here. So I'm going to do this, and then I got one thing quickly for you guys, and then we'll get to the rest of these charts. All right. All right. So GDX clear breakout. You know, this has been moving right with gold. The one thing I will say is you got a big gap up here, and you're starting to see, yesterday you're starting to see kind of some movements here. A lot of times things want to fill the gap. So from my perspective, you could kind of probably head a little bit higher here on GDX. I know not all gold miners are acting kind of the same right now, but I think at some point you're going to retrace this level here at 47. That would be the buying opportunity. And you could retrace pretty quickly. If you do get a news event and it breaks this 48 level here, pull it out to 65 minute, probably see it. 30 might be better. All right. So, all right. Yep. So we kind of break down, and you can see you kind of had already one little low break, right? But this would be a level here on 50. So the round 50, that breaks lower. You can expect that it's going to want to go back to that 47. And then the next level that you need to take out is about 49. So those are your two levels on the short-term basis. So below 50, you could probably get short to try to get back towards that 47. Or if you just want to look at this as a buying opportunity, I wouldn't have a problem with that if you're not a short-term trader. So if you're a short-term trader, though, again, you kind of break these lows here around 49. You can even, like I said, take a stab at around 50 when you look at that 65 minute. And you might be able to capture that move to 47. All right, real quick, I do have a little quick promo here. We are launching a new service. It's called Trade of the Week for Schaefer's. And I'm going to stick it in the chat so everybody can go. All you got to do is simply text the phone number in there. It's 513 589-3800, and we'll give you a call, or you can even call the number and it'll go into us and you'll get one of our representatives. But we are giving you some analysis on what our kind of insights are on the markets, and then we are giving you a trade of the week, and it is 50% off for a founder price. So here it is, and we'll get back to the charts. So there you go. It's in the chat. So if anybody wants to give us a call, 50% off for trade of the week and some weekly insights on the options market and the markets in general. All right, so Hood. All right, Hood. I see that's in there twice. Let's get to Hood. This is something actually I was trying to play in options just the other day. Um, and I was trying to play it on this IPO retake here, right? So you saw this little inside day candle. Like I said, 20-day moving average. I'm like, okay, well, that's tougher. We're below it, but it took back the IPO price. So the IPO price for Hood was $38. And it came back into these weekly closing price resistance levels and the weekly wick resistant levels. And then never mind that 30 strike peak put. That was from another chart. So I'm going to guess 30 strike is not the peak put anymore, but those are just some old notes. No big deal. Normally I would have cleaned that up. But it's a level that was there with that gap anyways, right? So it's smart. It's a decent level to have on the chart. As you can see, we bottomed right there. Got the DeMark Niner not long after that, and then we took back that IPO price. Problem is where I wanted to put it was we traded certain services, and one was for options underneath $5. That's a service out there where we're trying to gain 200%, and the options were just so expensive that I really need to kind of buy two strikes out, and we try to trade at the money if we can. But right now you can see Hood is sitting right here at the year-to-date anchored VWAP level, right? So we haven't got through that resistance, and that was part of my problem with taking the trade long is, hey, we're not through that year-to-date anchored VWAP. That could reject. Even though it retook that IPO price, trend is heading higher, 5-day moving average is heading higher, and you have that 50-day moving average. It's all pretty tightly compact. A lot of times, what that means to me is until we kind of can get through that congestion, we're just going to eat time premium away. So, again, why I didn't take the trade. But you are above. Again, you're all are above 43.25, $43 really kind of, let's just say. This was that previous kind of resistance level before you got that big move higher on the crypto news. And this is the name that we traded. I mean, I got long on this one. You can see these arrows. We got long again on this arrow, and then we got long again on this arrow in the fall. This is a name that we really, really liked. Throughout the end of 2024, multiple of us were trading this name. So again, I think that does say something. None of us have traded it yet. It's something that is, I know, on my radar and another trader's radar, but we're just kind of in this congestion phase with the volatility. It's really tough. Uh, I would probably wait for this 50-day and the year-to-date anchored VWAP if you want to get long this right now, right? So, it's very steep, but then you're also going to have this level to contend with, 48.50. So if you want to get long, right this second, if you had to say that, I would say, hey, use $42 as your stop. Let this 5-day and this 20-day as your longer stop kind of manage the trade for you. Um, Again, you get a pullback to this 38 level. I think it's a place where you can add shares. But obviously understand that if you're going to build a position, you want to kind of go weekly, there is a chance you're going to go down to about 35.50 again if we get some more chop and volatility. CNX is the next one. CNX stuck in kind of a range. This did pop up on kind of a radar not that long ago. For me, if I'm going to swing this, we're going to get above 32 here. Just can't trade it yet without it being above 32. So you got this previous high here in March. We want to get above that. You can see these moving averages very flat. So if you want to get short though, I would probably look for a balance below this 5-day right here. So $30. You're only at $30.76. So that's not a bad break. You'd break below the 5-day, you'd break below year-to-date anchored VWAP, you'd break below the 50-day, and then you could play a trade down to about that 27.50 area here, kind of the previous lows. So that's how I would look at it. If you want to get long, again, I'd wait for this congestion to clear out above 32. Not a bad way to play, CNX. Otherwise, you're kind of stuck in the range. This is a thing that you could, trade honestly an iron condor on if you're an options trader. Set your wings kind of as far out as you can here. You're probably going to look at like the 10 to 20 delta on your wings. And then just, see if it stays in the range, you're going to collect premium all day until it breaks out. And then you can morph it, sell the sold strike and hold on to the bot call. All right, next one, TM. Toyota. Very gappy chart before it even pops up, I can tell you that. I don't mind trading the name. You can do really well on this. I was looking at a short not that long ago. Where was it? I think it was sometime last year here in this downtrend, but I don't remember. Let's kind of look. Hold this out to a weekly chart just because it's kind of one of those names where you gotta watch out for the gaps. So it's actually not a horrible spot, right? So you have this old cup and handle that you kind of saw in this weekly chart here. So 165 was that level on that. 160, 165 here. You're gonna have a little play. You did retake this 160 level, like I said, and now you're kind of bumping up here against that 2021 kind of support level. So let's see. Yeah, it's really tough on the daily. I'm gonna not lie. You are stuck in a range here, you know, by that big weekly level, and kind of look at that. And then 193. So, and you're right up at the 20-day. So honestly, if anything, I'd be looking for a short into like 180 here, maybe even 175. Again, another range bound chart. So again, also an opportunity here to sell premium, right? From an iron condor perspective, sell wings up here around this upper range and below this lower range, and you can probably collect premium as well. The one thing is you do have your moving averages moving lower or starting to, and that could put pressure to test that lower bounds on you around 160 again if we don't get good news. Silver, SPY. We did silver, so SPY. All right. And I do see David put that in there as well for the promo. All right. So we got SPY. Let's just look at SPY. All right. We had it up earlier again. So if you're just joining, we talked about last time we had this 161.8 fib, extension level. I said, hey, a lot of times these kind of stall or fail. This was back in the January event, and we kind of got that move lower, obviously. So now we came down. We tested the January 2023 highs. Again, old. I did build this off of something, so not all-time closing highs anymore, obviously. But you came down here and you tested that old January 2023 high kind of just pull it back. It might be sloppy just because this was something I did a lot. But this is a level to kind of look and have interest in. You get shoots down that low, you had to start looking at it as, hey, this is potentially a dip buy. It's a scary buy. But now we're back up, 540. So what are we looking at? We're running into this 20-day moving average. The next big level I would say is 550. And if I remember correctly, that's a pretty decent open interest level as well, where we have some calls at that level. Let's see if I can pull something up quick here on this side. SPY. And I know I don't have much time left, so throw whatever you need into the chart. And let's just look at 600. No, yeah, 600 and 500. I just want to see where the open interest levels are. So I'm just looking at an OI config very quickly so I can let you guys know what it kind of looks like for the coming days. All right, while that runs, let's just take a look here. So we'll get rid of this. Not needed anymore. Let's look at the fib now. All right. So far you have retraced, roughly I would say I don't have it on here, but that's the 38.2 fib, probably pretty close there. Why isn't the 50% on there? All right. All right, 50% we're near. All right. So you're on the 50% retrace mark. This would be the area that, if you're going to fail, you're going to probably fail somewhere between the 61.8 and this 50. So these are areas, if you want to short SPY, are better areas to take, right? You got these downtrends here on the moving averages. And for some reason, oh, that's because I got the strikes mixed up here. All right. All right, so the OI is running again, but this would be the area that I'd look to, you could try to place a short. Otherwise, look for a long over the 50% retrace and that 20-day moving average. But don't expect a ton, right? Like you're gonna maybe come up here, get up to that 200-day moving average. You have a downtrend 50-day moving average that also could pose as a problem. This is the previous anchored VWAP low. I don't think we really need that. And then we can kind of look at where is the anchored VWAP from the high here. This is a good level to gauge off of too. So that's right by that 20-day moving average. So if you get through those levels, you probably can get a trade into this, 575 area, maybe a little bit lower there around 570. It's going to be tough for a while here from a longer term perspective. It's just the facts of where we are. And quick thing on the calls. So 580 is a big level, lots of call open interest there. And then your support level, your first one would be about we're still not even above it, 545. So that's not even support. So we're just trying to get out of this negative gamma territory still. Um, any downside pressure, it looks like 525 is the next level, and then 500. So these are some big levels that you'll want to keep an eye on. As you can see, this 525 is right with VPOC as well. You can see this is where we would trade up to on the volatile days. And now that's where you kind of saw the support. A lot of that is driven by the open interest of options. And it looks like I have 1 minute. They're going to cut me off. So if you had anything else, HMY, real fast look, breaking out. Obviously a name. I would probably just follow it with the 5-day moving average for right now in this volatile market, 1650. You break through that, you're probably going to come back down, test this 20-day, test $15. So if you're looking for a better entry, you might wait for that breakdown and, subsequently that 20-day moving average probably will be around $15 at that previous peak. Otherwise, use a 5-day right here as your stop out if you're trading this short term. All right, that's it for me. I'm gonna guess the next person's ready to go. And until next time, everyone, trade them well.